when should you move your stops on a trading strategy? Hi, it's Charlie giving you Saturday's video. I hope you're very well. And this is one of the most common questions that we get. Well, when do you actually go about moving your stops, to break even or whatever? And I would always say, if you're trading with a mechanically based strategy, then you should go back and test that, because most people, when they are moving their stops up, they're doing it to make themselves feel good, because they feel that they've been in a trade for a while and they just want to move the stop up to break even a lot of the time as soon as they possibly can, so that they then see it as a risk-free trade. Well, the problem is it's not necessarily a risk-free trade if you move your stop to break even, if that actually becomes less profitable for you. So let me give you an example. So I've just done a back test here on a strategy, and this back test has given a given performance of an annualized return of 29%. Let's have a look what else we want to pick out here. Probably the win rate 52%, and an expectancy, its overall profitability of 0.56, so an expectancy ratio of 0.56, which is good, plus other bits in there. But we'll just pick on these points for a given strategy. Then what I did is, so what have we got? 29% return, 52% win rate, and an expectancy of 56. So then what I did is ran this same back test, but moving the stop to break even once you're 1 hour into profit. So now let's bring that up and we'll see the differences. So it's still profitable, and I think this is an important point here. It's still profitable, but we can see the annualized return drops to 24.5%. The win rate goes up because obviously you're moving your stops to break even, so you're not going to have quite so many losing trades, so your win rate goes up, but the expectancy ratio comes down. Still very healthy. So I mean, I'm actually being quite kind here to this strategy is pretty decent, and so because it still works quite well by moving your stop up. But this is my point. You have to ask yourself, and you have to ask yourself, who are you as a trader? Because there's no point in you going for the big winners or trying to make more profit, should I say, if you can't deal with that. So the first one, so if I bring the first one back, has a slightly lower win rate, but makes a healthier 5% extra per year, or over and above the previous one. But if you can't cope with a lower win rate in this example, then maybe you're actually still better off with the one that actually makes less, but maybe you'll right a little bit more of the time. But again, you have to look at yourself as a trader and say, well, what do I want? Because we all want, as traders, the biggest returns that we can possibly have. But sometimes we have to accept that, well, maybe we have a lower return, we forfeit that, but we move our stops to break even that bit quicker. So in this instance, I'm just talking about moving stops to break even in this example. But so only you can know that, what it is that you want. I'm more interested in overall profitability the majority of the time. So for my, and I think that as traders grow in experience, then they tend to go more towards that, whereby you're not as worried about getting stopped out, and you're not as worried about having a lower win rate. What you're actually more concerned with is your overall profitability. So in these two examples, we can see example one had a far greater profitability. They were still profitable. So you can imagine with something like this, maybe someone who's newer in trading might actually be better served, at least in the early periods of their trading, with a strategy whereby they are moving the stops to break even, just because it might help their psychology out. Now, I find that difficult to actually run with, because I know that why would you want to have a lower profitable strategy just in order to be right more often? I'd rather have the much higher profit, HP here, higher profit, and make a sacrifice on things like win rate. But again, that comes down to individual psychology. So the point of the question here today is, when should you move your trading stops? Well, partly this is going to come down to, one, you've got to back test this, but two, understand yourself as a trader and say, well, if my strategy is profitable, even if I am moving the stops up but less profitable, maybe I'm better served with that because I'm a bit more fragile at the moment as a trader because I'm relatively new or whatever. But you need to work towards focusing on overall profitability rather than worrying about win rate. So that's how I see it, that profitability is much more important. But at the same time, backtest, and that will tell you whether you can move your stops up or not. A lot of the time you can't even move your stops to break even because it will ruin a strategy sometimes as well. So do go back and backtest whether you can even afford to move your stops up to break even once you're only 1 hour into profit or even 2 hour into profit. Some strategies you can, and other strategies I've just shown here today, but there will be other strategies which it makes too much of a drastic difference in performance that why would you do it? So there's some things to think about there this weekend.